Aloha, this is Kurt Nielsen with eMortgage Hawaii, and this is your mortgage market update for the Hawaiian Islands for November 28th, 2012. So let's get started. I think everybody knows that mortgage rates continue to hold the all-time lows. We have a 30-year fixed at 3.125% with a fee of only 0.375. This assumes good credit, primary residence, single-family residence. You can also buy this rate all the way down to 2.875. I think this is an opportunity for sellers to differentiate their property, offer perhaps a 1% contribution to closing cost, and the buyer can use those funds to buy a rate down to 2.875%. And I think if you can offer something sub 3% on a 30-year fix, it really differentiate the property and help you get the property sold. So it's something you might want to think about. If you need any help with that, I can help create flyers for these seller buy downs. These are the rates for all the conforming and jumbo loans. Again, the conforming 30-year fixed at 3.125%, 15-year fixed at 2.5%. And now you can see that the ARMs are not much different than the fixed rate loans. So we're not seeing a lot of interest in these ARMs, and the reason for that, the government is selling shorter term securities, which is pushing these rates up, and buying longer term securities, which is pushing these rates down. That's called the TWIST program. And that same thing is happening in jumbo rates. You can see that we can get a 30-year fixed jumbo rate up to $2 million at 3.5% with only a quarter point in fee, 15-year fixed at 2.75. And then again, you can see these ARMs aren't a heck of a lot lower than the fixed rate loans. So it's really good news for home buyers, good news for realtors, heading into the selling season this winter here in Hawaii. So let's talk about what's happening in the market. One thing you should be aware of, there's a new agency called the CFPB that was developed with the Dodd-Frank Act. CFPB stands for the Consumer Fraud Protection Bureau. And now that President Obama has been reelected, their existence is assured, and they continue to issue more and more rules which are tightening the lending policies of all the banks. So instead of loosening up restrictions, the opposite is happening. They're tightening up, and it's causing us delays in closings. I think the average loan takes 45 to 60 days now with some lenders to get through. Now, I still have lenders that can provide conditional loan approvals in 24 to 48 hours, but most banks are quite a bit longer than that. Also, the feds continue to purchase mortgage-backed securities at the rate of $40 billion per month. This is what's driving mortgage rates down, and this is on purpose. They're trying to improve the demand for homes, both existing homes and new homes, and it really is helping the new home construction industry. We're starting to see more and more permits and more homes going into construction. We currently only have a supply of 4.8 months across the nation for new home sales. Now, while this month new home sales were down a little bit, the trends are improving. It is showing that the housing market continues to improve. The new home median price is at $237,000. That's up 5.7% year over year. Now, this is an interesting figure. The average price for an existing home is only $178,000, so there's quite a premium between an existing home and new home sales. Part of this may be the REOs where they're selling distressed properties. That's a good portion of that, but also people want more energy efficient homes now, and new homes are providing that. The Case-Shiller Index, it's up to 3.0%. This means in the 20 major markets that they're studying, home prices are going up year over year at 3.0%. That shows that the housing market continues to improve. But one of the things that we're seeing is first-time home buyers as a percent of the market are dropping. Only 34.7% of the market are first-time home buyers. And I think this is being driven by what's happening with the FHA loans, which on the mainland is a primary source of loans. And FHA is increasing their mortgage insurance. I'm going to talk a little bit about this later. They're also talking about extending mortgage insurance for the life of the loan. So if you get into a great rate right now and you want to keep that loan, right now, if you get an FHA loan, as soon as the home becomes, you get down to 78% loan to value, the mortgage insurance goes away. But now the FHA, sometime in 2013, they want to put mortgage insurance on that loan for the life of the loan. So you won't be able to get out of a low interest loan, to get rid of that mortgage insurance unless you accept what will be a higher rate by the time you're ready to refinance. So not a lot of good ideas coming out of FHA. We are seeing an improvement in the non-distressed sales. They're now 64.7% of the market, up from 55%. So again, good trends all across the housing market, and especially here in Hawaii. We're seeing year-over-year growth on housing, single-family residences and condos almost on every island. So really good news heading into our winter sales season. Now, what we're really going to be looking at is this fiscal cliff issue. This will define mortgage rates over the next 4 to 8 weeks. If a deal is struck, rates will spike up, and I am sure a deal will happen of some sort. So we have a window of opportunity right now for buyers to lock in these low rates, because if a deal is struck, we're going to see a short-term spike. I don't think it's going to last for long, but we will see a short-term spike in rates. This is a chart of the mortgage-backed security monthly trends. Remember, as the price of the mortgage-backed security goes up, that means the interest rate goes down. We hit the lowest rate ever on October 2nd, and then we've been, we saw rates go up a little bit, and then they started going back down, and now we're in this roller coaster kind of area right here. We're almost back up to some of those high, those really low rates, but I don't believe we're going to break through this resistance level here, represented by this green line. We're going to have to see something in the market happen. Either a deal is struck, and boom, we're going to see the mortgage-backed security prices drop and rates go up, or something happens in Europe very negative, and we might break through and see even lower rates. But my bets are that we're seeing the lower of the rates right now, and there's risk of rates going up at this point. I also want to talk a little bit about what's happening with USDA, VA, FHA, and conforming loans. On most of the islands, USDA loans can cover most purchases for housing. USDA offers 102% financing. The 2% is their guarantee fee. However, USDA has an income limit. Each island's different, but around $87,850 for household income, so it's not for everybody. But the mortgage insurance on USDA is very low at 0.4%, and right now you can get a rate of 3 1/4, and USDA will pay all the closing costs. So the client can come in with no down payment, get a great rate, low mortgage insurance, and all of the closing costs paid with a rate of 3 1/4. Now look what's happening to FHA. FHA does 96.5% loan to value, so the buyer has to come in with 3.5%. There's a loan limit of $618,750. There is no income limits, so that's the reason FHA is wanted by certain borrowers. Again, the rate is 3 1/4 with all closing costs being paid. But look what's happening with mortgage insurance. It's as low as 1 1/4, but can go all the way up to 2.5. And they're talking about increasing that another 0.1% or 10 bips here shortly. And FHA in 2013 has announced that they're going to want to make the mortgage insurance stick for the life of the loan. So you cannot get rid of the mortgage insurance, no matter if the home's worth $300,000, you only owe $20,000 left, you still have to pay the mortgage insurance. So this, in my opinion, is going to extinguish the demand for FHA loans. I don't see anybody wanting those. If you're coming in with 3.5%, you could go to a conforming loan with only 1.5% more and not have that lifelong mortgage insurance. And again, conforming loans have lower mortgage insurance than FHA. So if you don't fit into USDA, most clients are going just for a normal 95% financing through conforming loans. Again, the mortgage insurance is more reasonable. And finally, VA loans, if for those veterans that can use the VA loan process, you get 100% financing. There is a guarantee fee very similar to USDA, but VA loans don't have mortgage insurance. That's a huge benefit. Again, 3.25% today. VA will pay all your closing costs. So, great program for our veterans. Again, I think FHA really is done for unless they go back and rethink that program. Just to remind you that eMortgage-wise, a full-service lender, we offer conforming, VA, USDA, FHA, jumbo, super jumbo. We lend to all foreign nationals, Chinese, Japanese, Korean, Australian, Canadian. We offer construction and land loans. We do lend in Lava Zone 2 for those of you on the Big Island. And we also have great commercial product. Some rates as low as 4% on commercial loans. Some loans are non-recourse, which is kind of rare these days, so keep us in mind for any of these products. So just to end on my forecast, in the short term we're going to be watching this fiscal cliff issue. If agreement is reached, stock market will rally. That's not good for bonds. Interest rates will bump up, and I think this will be a short-term peak, because I think the economy will come back into play, and there's not a lot of good news on the economy. I mean, there's some good news in the housing sector, but my belief is that we'll continue to struggle into 2013. If no agreement is reached, rates could even go lower. I mean, if they really do bungle this fiscal cliff issue, Wall Street will fall, and that's good for rates. So rates will come down even further. Again, in the medium term, I think interest rates will remain fairly low, maybe not as low as they are today. I think the economic news is going to show very slow progress, and there'll be slight pressure on rising rates as we get into 2013, but I think it's going to be slow. So I think we're going to have good rates through the first quarter of 2013, maybe into the first half of 2013. The economic bright spots, well, we all talked about housing already. We're seeing new home starts picking up. Permits are picking up. Housing prices will continue to show increases. And as most of you have heard, there's now a new energy boom. This is really an oil boom like we haven't seen in our lifetimes. This will continue to create U.S. jobs and may counter some of the losses in jobs that may come if Congress decides to raise taxes on small business and large corporations. So this oil boom is quite unusual, and I do believe that, I come from the energy business, I believe that in maybe 7 to 10 years the United States will become an energy exporter, because we have a lot more oil than any other country in the world. It just hasn't been developed, and now it is starting to be developed, at least on private and state lands. Federal government is still restricting permits on federal lands. So, but anyway, that's a good news in the energy sector. It should bring oil prices down long term. And that's it. If you want my free mortgage calculator for your smartphone, it does calculate mortgage payments in 3 simple steps. It'll pre-qualify your buyer, but more importantly, it'll download my rates every day, so you'll know exactly where interest rates are. Of course, I always assume qualified buyers with good FICO scores, so it's just a generic rate, but if you've got a good buyer, that should apply to them. To get it, go to your app store, type in Loan Apps, download the software, and then you can activate that software by using my cell phone with no dashes, 808-896-6800. Thank you very much for listening. I hope you have a good selling season this holiday season. Thank you.